Abhishek Agrawal, Executive Director of the company, joining in. Mr. Agrawal, good afternoon and thank you so much for joining us today. Welcome to the show. I just wanted to start with, the recent developments with the company, especially let's start with the agreement with Gail India. It is, a landmark agreement to enter a gas supply agreement with the company. I wanted to just understand if you couldn't talk us through more about this particular agreement as well as, what is your expectation of a per unit price of LNG going forward with this agreement?
Very good afternoon. Yes, we have finally signed the MOU with Gail. We're the first company in Chhattisgarh to sign the MOU for a long term of 7 years. Based on the pricing, the pricing is a little complicated because there is a variable component, which is the import of gas. Second is the fixed component. But in today's market, if you see, the landed price of LNG will be about $12 MMBTU, which is in par with the current coal market. So going forward, looking at the sustainable, agreement and development of products, we've entered an MOU with Gail.
Right. Abhishek, overall, with this agreement now, Gail will be supplying LNG to your upcoming pellet plant, right? Now, commissioning happens from the first quarter of FY26. Overall, how much of the business contribution will come in from this plant and what will be the utilization at the start?
We're looking to commission the plant somewhere in Q1 26. In parallel, where the Gail supplies the natural gas, not the LNG, just to correct. And in terms of contribution, pellet plant, we're currently operating at 2.7 million tons. With additional 2 million tons and with current pricing, we can see additional revenue of, being the first year, we consider production of 50%, which is the 1 million. So at 1 million, we can see an additional, volume of about, 800 crores going forward.
Another, Mr. Agrawal has been updated with, the acquisition of Jammu Pigment as well. You have acquired roughly about 51% stake. Talk to us regarding the rationale of the same and what kind of execution and, what is the near-term timeline for completion of this particular acquisition?
We have already completed the acquisition. We have already transferred the money. Now we hold both seats and we are the major shareholder in Jammu Pigments. The whole idea behind, entering into the non-ferrous recycling unit was we do see value out of the business, because of the recycling, the carbon emissions, all those paths going forward. If you see, the company called Gravita, which is the same space and they're listed, but they're mainly doing into, lead and other stuff. Whereas Jammu Pigments, apart from lead, they're also into zinc, cadmium and other stuff. So we do value out of it. We see a good positive EBITDA going forward. And with current expansion, which we have already undertaken, we are substantially EBITDA adding to the company going forward. That's the whole idea.
Okay. And overall, if you see in terms of the business strategy as well, how are you looking at diversification? Because you're talking about PVC and PVC pipes as well, right? So from here on, what is going to be the strategy and what is the end game in the 3 to 5 years from now?
We are already into the pipe segment, but the idea behind OPVC was, OPVC is a direct replacement of DI pipes for bigger sizes because the strength of the pipes is more. The capacity in the first phase is quite less. We are putting up 3 machines with an annual capacity of, say, about 6,000 tons to test the business. And once successful, going forward, we'll expand into OPVC market. We have no intention to enter the DI market because OPVC in the future will replace DI for bigger sections of pipe. So that's the whole idea.
But Mr. Agrawal, let me just take forward this point of OPVC because, the piping companies have also been, speaking very highly of this particular segment. We have the market leaders also enter the OPVC segment, but they have mentioned that, at the start, the next 12 to 18 months is going to be slow on execution. Is that the same rationale for you as well?
We have tied up with an Indian manufacturer who will supply the machines. So we can see the revenue from OPVC business by, say, FY26 Q3, which is about 9 months from now on, if everything goes well.
Okay. Apart from that, Rishabh, in terms of your production guidance across segments, you've already achieved it in the first half of FY25, right? So whatever comes in incrementally in the second half is going to be added. Is that something that you've already baked in terms of your FY25 top line and margin guidance, or how does that pan out? How does it change?
No, we have already, taken that into consideration during the start of the year. So we are on target to, achieve all our production guidance as per given earlier.
Mr. Agarwal, final question from my side actually. I just wanted to understand whether, what's the kind of outlook that you're seeing for the second half of FY25? Do you see, momentum continuing for the company as well? And is there anything that you're watching out for as well?
See, to be honest, the market is sluggish right now. The steel demand is on the lower side, which has impacted the prices over the supply chain. To talk about pellet is currently trading at about 9,000 rupees ex per. But what we're looking forward to is, as a company, we've heavily invested, in decarbonization. So we are waiting for the government's new carbon tax mechanism scheme, where we feel as a company we will benefit a lot because we've invested heavily on the decarbonization side. So we're really looking forward to the new mechanism from the government.
Right. Abhishek, overall, so from here on, in terms of capacity, you are expanding in terms of the iron ore mining capacity from here on. What is the capex expected to look like? Because 6,700 odd crores is what you were looking to going ahead. 6,000 is something which is yet to be spent. What is the plan from here on if you have to look at it from scratch? How much are you going to spend over the next 3 years? And is it going to be from internal accruals and where?
See, for the first, the iron ore mining expansion and the pellet expansion, along with the solar project, will take up about 1,200 crores, for which the investment has already started. The pellet plant will come into line, say, Q1 26. The mining approval, the file is progressing, and hopefully we'll get the approvals by end of Q4. Once that is in hand, we'll start investing in the mines expansion as well. And the major expansion will happen for the new steel complex of 2 million, where EC is already underway. And as said earlier, we should be able to achieve the EC, get the EC by end of Q4. So when the EC is in hand, we will start investing in the new complex as well. So put together, the capex remains same. As if now, we have no intention to, borrow money from the banks. We are very well comfortable. We have a huge cash surplus. But depending on the market situation, if given a requirement, we might raise some money going forward. But no plans at the moment.